Good afternoon, and thank you for the invite. Jonathan did a really good job to sell copper, and I'm going to tell you why being a producer is also a good idea. So when the cycle turns, you're in production, you're not trying to get in. The history of Aeris is over the last 10 years since we got involved with the business, we spent significant time to fix the balance sheet, to get the company to a position where we could start to look at growth. And it took us about 5 years to get there, and then we started to look at how do we move the business forward. So that's just a standard disclaimer. So right now, we started this business with one copper mine, which is called the Triton copper mine. 3 years ago, we decided we got the balance sheet under control. We need to start to look at how do we put more multiple assets into the portfolio. And we bought the Cracko gold mine from Evolution Mining. That was an immediate transformation of the business from a $10 million market cap company to over $200 or $300 million at the time, because that assisted us immediately to bring in additional cash, which allowed us to invest more capital into the copper mine to start to look at new projects and growth of the copper mine. Exactly 12 months later, we bought 3 more businesses, 2 operating mines, the North Queensland Mount Colin mine, the Jaguar copper zinc mine, and the Stockman copper zinc project in Victoria. So we've gone from 1 mine to 3 mines to 4 mines actually in a space of 4 years. And unfortunately, last year, July, we had to put the Jaguar mine exactly 12 months after we purchased it into care and maintenance. It was a tough decision, but it was the right decision at the time. So as this growth has happened, we've added a lot of organic growth opportunities into the business, and I'll touch on all of those as we go through the presentation. This year we're forecasting to produce about 50,000 tonnes of copper equivalent. Now, if my calculation is correct, that's about 100 million pounds of copper in this financial year. There you go. So you can look at the share price, came back significantly. When we announced in July we have to put the Jaguar mine into care and maintenance, there was an immediate reaction in the market to that announcement, because at the same time, to allow us to do that, we had to put a $40 million debt facility in place to ensure we can get a controlled closure of that mine. Those two combined obviously had a major impact on the share price, as you can see, and from there it basically followed the general trend in the Australian market in our space in the peer group. So current market capitalization in Australian dollars is around $100 million. It's gone up from the numbers in that slide. And on the board, we got only a small board. On the senior executives, the CFO and CEO and myself have been working together for over 14 years. We run another company called Northern Goldfields, which was a gold company before. So I'm not going to go into any detail on this slide, but that's a portfolio. So 3 producing assets, all with potential to extend mine life, and then 2 development projects. As a combined group, there's more than 850,000 tonnes of copper in resource, 1 million tonnes of zinc, and 1.4 million ounces of gold in resource across the business. And as we go through this, you'll see how we would like to develop to end up with 3 long life, high copper producing assets, and then the gold mine as a supplier of cash to grow the rest of the business. On the production front, you'll see that the Triton copper mine, which has been the asset who's been in the portfolio all the time, has dropped in production over a period of 3 years significantly. And that was on the back of the mine which we were mining at the time was getting deeper and the grade was getting lower. In the last 2 years, we've invested about $200 million to start 2 new underground mines, where we used to mine about 1.3% copper from the Triton mine. These new deposits has got grades of 2.6 and 1.8%. So a significant change in grade profile, and that's where you can see where the guidance we've got out for our financial year 24 goes as high as 24,000 tonnes of copper. And that's how we will see the continuous growth of this as we bring those higher grade mines into higher production. At the Cracko mine, you can see when we bought it in FY21, we knew the production will come down to around 50,000 ounces when we bought it. At the time when we bought it, we thought there's 2 or 3 years life, but we think there's more. 3 years later, we say, well, we still think there's 3 years life, and we still think there's more than that. It's just one of those type of gold deposits. As you explore, you keep finding, and it does extend. In North Queensland, we got a smallish copper mine doing about 10,000 tons of copper. It's a toll treatment arrangement. We mine it, we truck it. It will finish in the next 12 months, but then we'll start the next project, which is called Barbara, to further extend that life in North Queensland. I'll just touch very quickly on each one of these operations. So the Triton mine got 24 million tons at about 1.5% copper in resource. You can see a very large tenement package. You can see each one of those blue areas is current resources or mines. In fact, all the ones in blue will be future mines. In the last 2 years, we've moved our exploration attention to the northern side of the tenement package, and we discovered the Constellation deposit. And we are still busy continuing the exploration into that northern area of the business. That's just the project pipeline. So we currently got 4 mines running, which feed a 1.8 million ton process facility. And then there's 3 phases of bringing in other bigger projects and high grade projects into production over the next 8 years to continue the production profile of the Triton mine. That's just an example of Constellation. That is the new discovery. Basically started surface. We did an EM survey. We identified the target. First drill hole hit the ore body, and within a very short space of time, it has extended at depth, and it still continues. But we stopped drilling at depth. It's now putting the feasibility study together. We're drilling right now to get to indicated status on the resource, so that we can bring out a feasibility study in the next 6 months. That will come into production within the next 12 to 18 months at the Triton mine. Cracko, that's the mine in Queensland, the gold mine. Very neat plant in a very different area as all the others. As you can see at that bottom right, the resource kept going down as it was in previous ownership because they always were going to sell this and they were looking for big discoveries. Since we bought it in 2021, you can see the resource are all the way back to 526,000 ounces, which is similar to what it was in 2016. And that's just the nature of this. If you drill it, you'll keep finding it. And as you can see on that slide, that we're mining in that western vein field. It's a lot of vein structures. The geologists spend a lot of time drilling and assessing and keep on finding new structures which keep on extending the mine life, to the point that we spent $15 million in the last 6 months to do a tailings dam lift to extend that life beyond 3 years, again, as we see the resource continue to grow and convert to reserves. The biggest opportunity for us in that area is, if you look at that slide, that image on the right-hand side, you can see where the western vein field sitting those grey. All that southern area below that hasn't been explored, hasn't been tested, and that's part of the work we're doing. And there's a good likelihood to find something more substantial down south. The Mount Colin mine. The beauty of this mine is what you see there is the footprint. There's no plant, there's no tailings dam, there's no rehabilitation cost of $20 million to do rehabilitation once you're finished with this. We mine it, we truck it to Ernest Henry mine, which is owned by Evolution Mining. They process it for us and we then get paid for the copper. Right now we're in extraction phase, so we're generating cash. It's basically harvesting cash out of it. Within the next 6 to 12 months, it will be finished, but it does generate significant cash in a very short space of time. Once this is done, we will move across to the Barbara project, which has been mined before. We will follow exactly the same process. We will move the office and the camp basically to Barbara, and at Barbara we will then do the same process, go underground, there's about 3 years of life sitting in Barbara, and then we'll look at what's the next project around North Queensland. The Mount Isa region in Australia is one of the most popular copper regions, basically, in Australia. So a lot of opportunities at the Mount Isa region. Then you look at the development project. So that's a photo of the Jaguar mine decline. So as I said earlier, we had to put this mine into care and maintenance. And the reason being, if you look at that right-hand side, that bottom blue in that image is why we bought this mine. So we bought it, we knew that there's about 3 to 4 years of mine life down at that Turbo deposit. But after about 6 to 12 months of ownership, we realized that it's not going to pay to try to get there while you just keep mining the Bentley mine, because you're going to make a loss. There's not enough stopes left to make money and then develop to the Turbo deposit. So a decision was made to put in care and maintenance. We've identified 3 other deposits, all existing mines, a Jaguar mine, which is a historical mine with copper grades of plus 2% copper, and the Teutonic Bore and Triumph, all deposits which are ready to go. So the aim for this is a study are being done right now to say, will you mine 2 projects at any time, utilize the full capacity of the process facility to 700,000 tonnes and not 480,000 tonnes, generate about 20,000 tonnes copper equivalent production over an 8+ year mine life. That will be a feasible project that will make a lot more sense in the long run and can sustain the ups and downs of specifically the zinc price. The zinc price, of course, is the other reason why we put in care and maintenance, because it dropped by 30% in a very short space of time while we in ownership. One of the big reasons we did the last transaction was for the Stockman project. This is a 10 million tonne reserve of more than 3.5% copper equivalent grades. It's a historical mine. It was mined in the 80s. There's a tailings dam. We have approvals already for mining lease approvals, environmental approvals, but we inherited the feasibility study. Part of the work we've done in the last 6 months, we've identified new technology called Albion process. Some of you might know the Albion process, and the guys are doing test work. We are convinced that we can get the recoveries from the mid-70s to the high 80s, 90% recoveries for copper and zinc and better gold recovery. That will materially change the economics of this project. So we take another 6 months. We did new core. That test work is underway already, and we will then start to look at what is the next process and bring a study out after we've done that test work. That will be a 12-year mine life with the current reserve. The deposits are still open at depth. There's still another deposit which we are planning not to bring into this feasibility study, but will become part of future mining for Stockman. So I guess if I can summarize the business, I get a lot of time, the question, so where do you want to be in 3 or 5 years? The big aim for us is utilizing the organic growth opportunities within the business by restarting the Jaguar mine, develop the Constellation mine at Triton, and develop the Stockman project. You'll have 3 long life assets doing around 70 to 80,000 tonnes of copper equivalent production out of 3 long life assets. And then you've got North Queensland and Cracko as either suppliers of cash, or you'll decide what is the best way strategically forward with those. But the big aim is long life assets and create a sustainable business from there as part of the growth plan. All of these assets have got opportunities to grow at depth and as various other opportunities to, just from exploration, get a lot of value. I think that's me. Thank you very much.